It's Brian Preston, the money guy.
Rob says, if someone is hitting the 25% savings goal, would you ever consider more than 8% rule for monthly payments? And if so, what is the max you would ever recommend? No. If you're saving more than 25%, or if you're even financially independent, put more down on the car or pay cash for the car if you're in that situation. There's no point in trying to run up a really high monthly payment on your car because you're just going to get yourself in a tight spot. What if you go above 8% and you're at like 15%, 16% of your gross income and then you lose your job? Or COVID happens and you do nothing wrong, but there's a reduction in force. Or you get furloughed, or fill in the blank on the things that could happen. 8% is going to be that guardrail that keeps you where you need to be. If you have excess margin, if you have excess money, put more down in the car to drive the payment down to the 8%, or just pay cash. I don't think, unless you're young, that's the only time that I'll give a little bit, but even that's testy. But like if you're young and you got a family and your income is on a trajectory that goes up, maybe you could wiggle on the 8% a little bit, but to the best of your ability, try not to exceed that number.
That question made me immediately think of the Margin Call movie.
Yeah.
Where the trader was talking about how quickly $1 million disappears because he was talking about his mortgage. Then he was talking about his, like, I can't remember if it was a Ferrari, Lamborghini. So when I have somebody who tells me, obviously they've got great discipline that they're saving 25%, but as a percentage of their income, that's when I start thinking about somebody who's saving 25% but is now looking at a car that's still going to be greater than 8%. Are we talking about Ferrari or Lamborghini? I mean, that's what it did make me think of, that Margin Call movie scene. I completely agree with you because realize cars are horrible for their finances. More than likely, they're making you poor. So just wait for the right time. Like I said, I didn't buy my first new car until I was 32 years of age. I think that is the right way to look at it because cars are actually sucking wealth from you. They're not creating wealth. So just make sure you're doing it in the right time and not accelerating that. Yes, we all want to look cool. I grew up in a car house. Mm-hmm. I mean, my family restored a bunch of old classic cars. But I always knew I was on a bigger mission of building the army of dollar bills, taking a little bit of today for that great, big, beautiful tomorrow later. Yep. That was what the priority was, not to look cool. Because, by the way, if you do this right, you get to be, now look, I'm a little bit older. Maybe I'm not, I don't think I was that cool when I was in my early 30s too.
You're still cool
But now you can buy nice cars and it just doesn't impact what's going on in your financial life.